After a recent sell-off, gold is up on some bargain hunting with prices back above $1,830 per ounce. And this may be the short term, but in my opinion, in the long term, the US dollar is clearly in control of gold's future. And I've been watching the move in the dollar and the reaction in gold over the past several months. And as usual, the media has it wrong. Many pundits have been surprised by the dollar's recent strength. And for their answers, they will look toward designated new U.S. Treasury Secretary Janet Yellen's testimony scheduled for Tuesday. The reason is Yellen is expected to say that she does not favor a deliberate weakening of the dollar. So when the dollar overshadows gold, this means lower gold prices. However, to me, the move in the dollar and the move in gold has been in progress over months and is nothing new because interest rates are also part of the mix. And interest rates have been on the rise along with the recent strength in the dollar. You may also ask about all the non-stop money printing and the spectre of inflation. Well, it gets complicated. But as for the dollar and as for gold, all I can tell you is what I see in the charts. So let's take a look. And we're looking at a 2-year weekly chart on the US dollar, and the symbol is $USD, as you can see in the upper left of the chart, and we're using stockcharts.com. Middle portion here simply is the price chart. You can see that bottom here between August and September of 2020, and we declined down here from December into the end of the year, but popped up just recently here at that point, if you can see. Now, in the lower portion is the MACD, and you can see that the maximum negativity was down here again in that August to September time frame. The recent decline in the MAC after it went above the slow line is also down here in December to the end of the year, but you can see that we're improving with the fast line attempting to move up through that slow line, and I think it's going to be successful, and I think it's going to carry forward, which means the price of the dollar should follow. In the upper portion of the chart is the RSI. You can see that bottoming there again in that August to September time frame. And then also here in the December to the end of the year. But you can see that that very faint tick up in the RSI is also indicating an upward move, which means the price of the dollar should continue. Now, I've looked at longer term charts, including the monthly and the quarterly, and those also show that the dollar is attempting to bottom here and move up. So I'm pretty convinced that at least we're going to get a solid foundation here. We may go sideways, but I think the trend should be up, at least in the mid to longer term. And now let's go take a look at the chart for gold. And we're now looking at a monthly chart on the Spiders Gold Trust, and the symbol is GLD, and this is a very good proxy for the price of gold, and that's why I use it. You can see the top there in 2011, and a very nice decline, consolidation, and nice bull moving on up here. We got to this point, and we started to trail off a little bit. So it starts to look like a cup and handle, but I'm not so sure about this handle. And let's show you why. Moving down here into volume, that's fine. It looks good. But here into the MAC, it looks like we have a pretty decent topping process going on right here, not unlike the process we had there. We're looking with a downward moving fast line that looks like it's going to slice through that slow line here. So I'm thinking that there's going to be at least several months of difficulty for the price of gold. I'm not saying that we're going to come all the way down like this in a multi-year decline. That is a possibility, but I think the probability is that we'll move on down to some point and gain some traction and create a bottoming process above that zero line here. But that still means we have some tough times ahead. But let's look at some of the other oscillators. Again, the histogram, very steep decline. That means it's not going to slow down all that soon. So we do have some time on the downside. So it might be a little bit difficult. You look at this top here and this top here. This is the decline multi-year from 2011 to 2014, and we're just starting this decline here, and you can see that sawtoothing along, and we're now on the underside of that slow line. Moving here into the relative strength, definitely continuing on down, a mediocre 57.60. So it doesn't look like it's stopped yet. I don't see any signs of any consolidation or bottoming process, at least not yet. Stochastics, same thing. Nice topping process with the fast line move through the slow line heading on down. We're still above that midline or 50 level, so there's still some strength. Is there enough strength to stop this decline and bottom here and then head back up? Only time will tell, but I think it's going to be a fair amount of time. Same thing here in the Williams. So nothing in any of these oscillators is telling me that gold is going to slow down. There is the possibility, such as here. The top again, we came down, we reflected off of that 20 EMA, we came back up for another top, and then another decline. So we're still above that 20 EMA here. And so there's a possibility we could come down and when the two meet, get a reflection off of that and move up. That's my number one scenario. I think that's the greatest probability. So we're not there. It'll take maybe a few months or so to see if that does reflect back on up. So if you're in gold, to me, that's the greatest probability. But again, this top here did not reach the prior top and then it declined and it only stayed up here for a brief amount of time. So simply be prepared and be prudent. And for today, that's ChewDog Charts. Thank you.